Welcome to Inside India. I'm Avitation Singh. These are your headlines. India's Foreign Minister S. Jaishankar speaking with U.S. Secretary of State Marco Rubio. They discuss trade, critical minerals and energy, with the trade deal still elusive. The uncertainty of a trade deal keeping the Indian rupee pinned at record lows. The dollar's strength not helping the currency. Also, the World Bank expects global growth to hold up this year, but sees a slowdown in emerging markets. All right, let's get started with JP Yong for a quick check on the Asian markets. JP, what's expected? We're watching out for China, of course, aren't we?
Yeah, good morning, Avitation. Happy hump day. We are looking at a bit of a mixed picture for Asian markets so far in the midweek, but also a very interesting session, I might actually say. Take a look at how the board is actually showing the major equity indices across the Asia Pacific, from Tokyo to Taipei, from Shanghai to Sydney. You're seeing the likes, for instance, of the Korean Kospi today, which is just marginally in the red. Now, they did open today at a record high, actually, but then reversed to, of course, perhaps signs of profit takers after it tested yet another resistance in today's session. But still, overall, since the start of this year, it's been positive for the Kospi, perhaps the first signs of profit taking out in Seoul. The Nikkei 225, once again notable because of the breach of 54,000 today. But perhaps the thing to note there is the Japanese yen. And again, the prospect of that snap election and also extended stimulus also dampening that as to the currency, which, as you can see here, has now crossed 159 against the US dollar. More weakness could invite potential intervention once again, and perhaps some more action from monetary and fiscal authorities in Tokyo. But so far, the Japanese yen definitely the one to watch in terms of the currency space in Asia. Now, one quick check now of how Chinese markets are doing today, and it's looking a bit more benign, but to the upside, at least for stocks from Shanghai to Hong Kong. You're seeing the CSI 300 today up by about 0.9%, and the Hang Seng Index also trading higher. One bright spot also is the Hang Seng Mainland Property Index. There's still some ongoing woes and questions about the property sector out in China, but so far the MPI is trading marginally in the green so far on what's been a fairly optimistic day, where we're looking to for a confirmation on some of the trade data coming from China for the last month of 2025. So far, note some sources saying that exports and imports did surprise to the upside with regards to the trade picture out in the world's second largest economy, Amitoj.
Well, thanks so much for that, JP. Much appreciated. We'll come back to you as and when there are more developments. Now, we also want to get you a sense of what the World Bank is saying. It's sounding more positive about global growth prospects this year in its latest economic forecast. It now forecasts the global economy will grow 2.6% this year, slowing from 2.7% last year, but still slightly higher than its June projections. The World Bank says trade was propped up last year by the front loading of trade ahead of tariffs, and warned that tariffs and policy uncertainty will remain a drag this year. For emerging markets, that includes India, the World Bank does see a bit of a slowdown. The Indian markets come online in about 45 minutes. Here's what GIFT Nifty futures are indicating. It's not looking entirely positive for the last couple of days. Nifty fell over 1% on Tuesday, making it 6 days of losses in 7 days. At this point, a muted start. We're looking at 760. That's 25,760 compared to the 732 that we had at close, of course, on Tuesday. Now, yesterday, the U.S. ambassador to India was the game changer. Remember, because he said something positive, the market reacted to that. But trade talks are still going on. They happened on Tuesday. Foreign investors are still selling Indian equities worth, well, 15 billion rupees or 166 million on Tuesday. Remember, nearly 20 billion was sold in the last year. Third quarter earnings in full swing. We're watching that. 25 companies announcing their results. We're watching the big ones: Infosys, Grow, HDB Financial Services, and HDFC AMC. Well, oil prices we're watching very closely because they've had a streak of gains on, earlier the last couple of days, but they halted on Wednesday, slipping after 4 straight days. The rupee is where there's a lot of attention. The risk of slipping is continuing. It's a near-term support is where people are, worried. Traders are worried. The U.S. inflation data lifted the dollar to a near 1-month high, and now what that's happened is that the support that's seen by traders at 90.28 to 90.30 in the near-term level, according to traders, they feel that the RBI will potentially have to intervene, as they did heavily on Monday. So we're watching that. And talking about the central bank, the Reserve Bank of India's 3-year dollar-rupee swap drew strong demand on Tuesday, with bids coming in nearly 3 times the $10 billion auction size. The RBI received bids worth almost $30 billion and expected 42 offers, setting the premium cutoff at 7.28 rupees. Bankers say corporates piled in to hedge overseas borrowings and exploit attractive swap rate gaps. The move will inject rupee liquidity into the banking system this week, part of the RBI's broader push to improve transmission of rate cuts, even as support for the rupee has offset some liquidity gains. But perhaps what took the headlines in India was these reports saying India's government has ordered quick commerce firm Blinkit, Zepto and Swiggy to stop promoting their grocery services as 10-minute deliveries in a blow to the fast-growing sector. The Labour Ministry raised safety and worker welfare concerns in a closed-door meeting, citing fears of rash driving and pressure on delivery riders. The industry is valued at about $11.5 billion and has attracted heavy investor interest. Blinkit has already dropped the 10-minute label, but Zepto and Swiggy's Instamart are still using it on app stores. CNBC did reach out to Blinkit and Zepto, but we haven't got a response yet among these. Blinkit's parent firm, Eternal and Swiggy, are listed. We'll check on those stocks when the market opens. We can, of course, bring up what's happening with them in just a bit, but we also want to just give you a sense of what's happening with the trade talks. India's Foreign Minister, S. Jaishankar, saying he's held talks with U.S. Secretary of State Marco Rubio, focusing on trade, energy, defense, and critical minerals. No outcome yet. The call comes as both countries target to reach a trade agreement after last year's trade talks, failed to deliver a deal and rattle markets. The U.S. State Department said Rubio welcomed India's move to open up its nuclear power sector and expressed interest in deeper civil nuclear cooperation, while both sides reaffirmed support for a free and open Indo-Pacific. Meantime, Canada says it will start FTA negotiations with India next month after a bit of a pause between 23 and 24, because of a diplomatic crisis. Now, Praveen Jawghani is the CEO at UTI International. He's back with us. I have to say, you were the first person I ever interviewed on CNBC, so it's great to have you back. I appreciate that. I want to just get a sense of what you think is going to happen, because the last 6 days out of 7 have been a correction. I don't know what to call it. What is it that's happening at the market? Why is it sliding? It goes up, it goes down intraday. You had some positive comments from the ambassador from the US coming in, Sergio Gore. That shook up the market on Tuesday. That was the only positive day. Not clear what's going on.
Yeah, great to be back, Amitoj. This is quite seasonal, if I may say. In January, before announcement of the Indian budget, markets do tend to be range-bound. Essentially, it's a wait-and-watch period of what the government has in store from a fiscal stimulus perspective, because given where the earnings have been for better part of 25, markets are fully priced. When you look at sort of India, there are 3 different prisms. There's the economy, there's the markets, and then there's the tightrope of geopolitics. Markets are still expensive, and that has kept foreign investors away. $18 billion of outflows.
Actually 19 or so, yeah.
19 odd billions of outflow last year. Foreign investors, from what we understand, are on the edge waiting for earnings revival in India. And we think in the next 2 quarters, by the April earnings season, we should see earnings in mid-teens. And that should be a trigger for foreign investors to come back in. Till then, markets could go sideways, driven more by noise because of absence of signal. The signal really is going to be earnings and a trade deal when it comes through.
Yeah, I understand the worst hit sector when it comes to the foreign funds going outside India is the IT sector. Earnings are not going to hit mid-teens for the IT sector, as we understand, right? So if the biggest sector where the funds are going out is not going to have that, then how much correction will there be in this situation with foreign funds?
See, IT is part of the game. It's not the whole game. And India's story in earnings revival is really around the BFSI sector, as well as anything that could be consumer demand orientated. We've had 2 difficult years with earnings, and now that money has been put in the pockets of consumers through income tax cuts, that aggregates to about $12 billion US, and the GST cuts, which work for every consumer, that's about $23 billion. Together, that is $35 billion, not a non-trivial amount. I mean, given a GDP of $4.2 trillion, $35 billion is a lot of money. And this thing is perpetually, annually in the pockets of consumers. So we should see an uptick in consumption-driven domestic demand and therefore earnings.
Okay, I just want to ask you something that an economist was talking about. What is your perspective on this? Because you obviously, talk to foreign investors a lot. One of the biggest issues since 2015 when the law was changed was around disputes handling. Disputes being handled within India. The rule basically said that now you can't handle a dispute between a foreign and a domestic company if there's a partnership outside of India. And that's been one of the biggest problems why foreign investors feel that this is not the place I want to put my money. Because contracts, 10-year contracts between foreign and Indian companies are ending, 2025 did end then. What's your take on that if you have an input? Because that's a law change ahead of the budget that we're watching out for, whether that happens.
It's a sticking point. I don't think it's as big as being created in some parts of the media. India, on a relative basis with the rest of the emerging markets, still is an outstanding framework of jurisprudence which does give comfort to the minority investor. An English-speaking country with English common law, 200 years of jurisprudence, and we have had case laws where the Supreme Court has upheld foreign investors against even sovereign entities. So the odd case being aside, I think India does have a good track record overall with respect to China, South Africa, Brazil. So in the EM landscape, India does score well. It's not the same as the West, but it does score well.
Okay, that's an interesting point. I'm going to dive more into that with an economist later. 2 months ago on our show, you said that the trade deal is delayed because they were waiting for the Bihar elections. Concessions have probably already been given by both sides, including India. We still don't have a deal. Does this suggest that the market should price in no deal for this year?
Thanks for calling me out on that one. All the indications from North Bloc at that point last year.
Although the Prime Minister's office is changing now very quickly. It's not going to be North Bloc. Carry on. Sorry,
yes. So at that point, the indications were that the deal is in the bag. However, what turns out, the sticking point was a lot of agriculture-oriented concessions, which Prime Minister Modi has been loath to give. Even now, if you note the comments made by External Affairs Minister Jaishankar on X, it said everything except agriculture. Agriculture is 18% of India's GDP, yet it employs almost 50% of India. Therefore, it is a politically sensitive area. And in fact, deal can most likely happen, but it's up to the whims and fancies of what side of the bed President Trump gets up on and how weaponized he wants trade to be. But agriculture is sensitive, particularly in a year like this, when the early indications are that the monsoon this year is in the balance. We've had a few good years with La Nina. This year is potentially on the edge as an El Nino year, which means safeguarding rural economy becomes a prime objective for the government. And I suspect we'll probably see some of that even in the budget.
Okay, so basically no deal this year.
No, I suspect a deal will come back on the table, but it's going to take a little more loss of hope from America.
Okay, got it. I want to ask you about Jefferies' warning that India's IT sector could lose up to a fifth of their profits due to the new labor codes. And I listened to HCL and TCS's earnings, and both mentioned that the labor codes had a considerable impact, one-time impact on their earnings. We've still got Infosys, we've still got a couple of the others, and the IT sector is in the headlines because you've had the likes of TCS lay off 30,000 people. So I want to couple that with the labor story, the labor reform story, with the fact that we don't have visibility on these, how many jobs are being lost to AI. Can you give us some visibility? Because we're not getting that clearly from the earnings calls.
That's a hard one, Amitoj. I saw a report which came out of the US last week, which said not the efficiency improvement that was expected from advent of AI is not being felt at all. But the jobs are certainly being lost at the entry level in financial services, in consulting, even in tech. So job losses are for sure real. I think from an India perspective, and again, this is another element that we hope to see in the budget, youth employment. When you educate so many young people, robbing them of hope becomes a political challenge, and therefore employment creation, particularly for the youth, will be a big objective for the Indian government. And if we're not in IT, then in other sectors, jobs have to be created.
How? How did they do it in the budget?
Manufacturing.
But again, how? We've been saying this for a long time. I'm not quite sure how they're going to do it because they've already extended themselves so much when it comes to reforms. So what else can we expect? PLI?
It really, see, you've got to throw money at the problem. I would go as far as to say selectively allowing Chinese entrepreneurs, Chinese businesses to set up in India. If it creates employment in the short run with the appropriate guardrails, it might be a good idea. If domestic private sector capex is not stepping up, you've got to get whoever's willing to step up. And the Chinese businesses are very keen to come to India. So between the government, whatever little private sector in India, and then foreign investors who are keen to come in, including the likes of Apple, you will have a lot of global tech firms coming into India because the blow hot, blow cold approach of the US is making no one happy. People like consistency, certainty, and India is willing to provide that.
Okay, so you don't have a number that you can give us as an estimate. It's impossible, right? I'm guessing. And I'm sorry to push you on that. But quick commerce, I want to talk about that because yesterday, Indian networks and phones are flashing all over. Hey, we're not going to get our delivery in 10 minutes. What the hell? And everyone was asking about it. And slowly we understood that what's actually happened is that the Labor Ministry, Mansukh Mandavia, the minister, has been speaking to these companies, Blinkit, the Zeptos, the Swiggy Instamarts. Hey guys, don't brand this as 10-minute delivery. Just remove that. Continue to deliver in 10 minutes if you can. Great. Does this have an impact on the market? Eternal was rising for some other reason, of course. We'll show the stocks. But what does this do to the quick commerce story in India? Nothing, right?
This is just a blip. 10 minutes or 15 minutes or 20 minutes makes no difference. But this is, Amit, just a question I get asked when I speak with global investors. Even pension funds, the CIOs will ask me, whether it's in Chicago or Stockholm, what is with this 10-minute? Why do Indian consumers want stuff in 10 minutes? Where's the rush? And I ask my mother that when she's ordering vegetables. But this is a victim of their own propaganda. Once you create that tagline, consumers expect it.
No, gig workers will feel much better about this.
Absolutely.
It's great for the economy in that context, right?
Absolutely.
Yeah, they will be safer and expectations will be lower. And that's something the Prime Minister, through his labor reform, which included gig workers for the first time, also, that was one primary objective. How does that impact the general job safety levels within the industry, and that has a ripple effect on the quick commerce sector?
No, it's absolutely a positive. Because having these drivers zipping around town on pavements sometimes, it is absolutely undesirable. So if the entire industry moves to a saner standard, absolutely a welcome story.
Okay, great.
And it's not going to derail the quick commerce trajectory in any way. If you look at something like Eternal, their CAGR growth of the stock is like 28% in the last 4 years. This story is just started.
Okay, 25% threat additionally if you deal or trade with Iran. India could potentially, that's Trump's threat again. We don't know if it's materializing. We don't know what's going to happen next, how it will play out. What's your take? How should the market react?
It's big on bluster. We'll see, because the biggest trading partners of Iran, as you all know, is China, UAE, Turkey. And then there's even Germany, there's Switzerland in there.
Yeah.
Iran has 60 trading partners. India is probably the 5th largest. And there's no oil being traded ever since 2019.
Yeah.
It's dry fruits for the most part that we import. And India exports basmati rice and a few other...
Rice is where the problem is, and we'll have to see how that develops. Praveen, thanks so much for joining us. We're completely out of time. We're going to have to go across right now to the latest trade data from China, just crossing the wires. Let's get to Emily Tan for more on that. Emily, what's the latest? What are you hearing?
Amatoja, we were expecting a slowdown in the numbers for the month of December in terms of trade for China, and export figures for the month of December up 6.6%. That is double what the market was waiting for. They were calling for a 3% increase for the month. For the full year, exports rising 5.5%. In terms of imports, higher by 5.7%. That is much better than the 0.9% increase that the market was looking for. For the full year, it was flat, coming in at zero in terms of imports for China for the full year 2025. In terms of the trade surplus for the month of December at $114 billion. For the full year, it is now $1.18 trillion. So this is adding on to the historic November figure when we saw for the first 11 months of this year where it topped $1 trillion for the first time, now at $1.18 trillion. If we want to break it down with the United States, the trade surplus for the month of December with the United States at $23.25 billion. That is a little bit, just a touch less than the month of November, bringing the full year trade surplus with the United States to $280.3 billion. We did get a chance to hear from the customs spokesperson. He says that the fundamentals for China's foreign trade is still solid, but the momentum of global trade remains insufficient. U.S. trade, two-way trade, standing at $374 billion US dollars. So these comments coming through from the Customs Bureau on the back of the latest numbers that had come through for trade. Exports really were expected to have slowed for 2025. It was all this front loading that the market was looking at, kind of trying to get ahead of all the Trump policies and the Trump trade, the trade tariffs. But now we're going to be watching in the outlook for 2026. As you know what, the front loading may be wrapping up. So what happens next and this slowdown that we could potentially see? We heard from the World Bank in terms of a slowdown that they're expecting in global growth, in particular in the emerging markets, and that to be led by China. On the back of this latest strong trade numbers, we are tracking the markets here. Shanghai, the composite, higher by 1.1%. We are hovering and trading at 10-year highs. In Shanghai, a more pronounced 2% pop, 2,732, and the Chinext at 33.98. That is a gain of 2.3%. Let's take a quick look at the Chinese currency. We have seen some appreciation, strength. It has pulled past 7, and if we do have the CNY, we could take a quick look at that before I hand things back to Amatoj. It is on its way, I'm told, and it is coming right now. We are tracking the currency and the expectations for appreciation as the CNY currently traded at 6.976. So a quick look at the China trade numbers. Exports again 6.6% for December. Imports jumping 5.7%. Amatoj, it's back to you.
Thanks so much for that, Emily. It's good to see that the Chinese currency is strengthening against the US dollar. I'm hoping that's going to happen with the Indian rupee. But let's also give you the latest. There's breaking news coming in from what's happening with silver. It's a quick check. Let's give you a sense. 90 was just broken for the first time. Right now it's back at 89.5, but what we can say through our reports that we're getting is that spot silver did cross 90 for the first time, rising more than 3% to a record high at 89.87 about an hour ago. 2 hours ago it rose about 2%. So there's something that we're watching. Remember, India is a big market for silver. A lot of attention given to both gold and silver. Gold has been, just punching above its weight for quite some time, and we're going to continue to see that. Let's just also give you a sense of what's happening with airlines. U.S. markets closed lower overnight, but Boeing shares, they bucked the trend, rising 2% overnight after reporting its annual delivery figures. Right here with me is CNBC's travel and transport reporter Monica Petrelli to break down those numbers. Tell us, what's it looking like? We discussed Airbus yesterday, now Boeing.
Yeah, so to understand why the market liked this, we look back to 2024, deliveries for Boeing, then 348 planes. We learned yesterday, well, that jumped to 600 planes for 2025. So that's a 72% jump. That's pretty big. I'd say not just a step forward, but a leap forward in Boeing's turnaround efforts. We also see orders jumping in a major way. In fact, orders for Boeing in 2025 topping that of Airbus. Again, led by many of the Middle Eastern carriers, but also last year, the first time that we really saw people use, or countries using Boeing planes as bargaining chips. A lot of times Boeing orders tied to those trade deals that's countries like Indonesia, Malaysia, Japan, South Korea were executing with the United States. Now, India got 20 planes, 15 going to Air India, 5 to Akasa. Still, though, 493 planes on the books, again led by Akasa, which is hoping to get 195 more jets from Boeing in the future. Now, the company's finance chief in December said that Boeing expects to have a positive cash flow this year. The market reacting after that, up 20%. That's again, good news for the company, but still, we can see from the stock price there, closing almost $245 per share yesterday. Still a pretty far cry from those pre-COVID days. In March of 2019, Boeing stock had hit around $430. So still a lot of room to go.
You know, when you talk about India and you connect that to Boeing, the conversation hasn't moved on from what happened in June, the crash, the Air India crash, Boeing plane. I get friends saying that, okay, I'm traveling, but I'm not going to book on, if there's a Boeing plane. That's something that's for some people important. So tell me about what's going on with those cases. What's going on with that situation?
Yeah, absolutely, and it's a very normal reaction from flyers once there is a crash to get a bit jittery for a while. And I think in terms of this crash particularly, because we still don't know the cause, but we can see at least some lawsuits getting involved here. We see a second lawsuit being filed, this time in the UK. Now remember, that flight was leaving India, departing, headed to London. We see 11 claimants making a claim there for personal injury. This is different, though, than the lawsuit that we saw filed in the U.S. last year. That is filed against Boeing and Honeywell, alleging negligence and product defects, effectively saying that those fuel switches, which are really at the heart of this crash, alleging that they were faulty. Now, the FAA does not believe that that is the cause. Of course, Indian officials pushing back against the notion that there was pilot error here, but ultimately we still simply do not know the cause, which is going to lead to the jitteriness, which you just talked about, as well as additional lawsuits to potentially maybe get some answers.
This kind of uncertainty is what results in speculation increasing, particularly in a country with 1.4 billion people. Thanks so much for that, Monica. Coming up, we'll take a deep dive on India's reshifting oil supplies in the wake of the situation in Iran, Venezuela, and continued U.S. pressure on New Delhi to cut its reliance on Russian oil. Stay with us. Welcome back. This is Inside India. The US dollar index recovering to a one-month high after latest US inflation data came in broadly in line with expectations. Headline CPI rising 0.3% last month, driven by higher rental and food costs. Core CPI also continued to rise last month. The data adding to expectations that the Fed will leave rates unchanged this month. But will President Trump like that as he continues to call for rates to be lowered as he kept up his attack on Fed Chair Jerome Powell?
Today, if you announce great numbers, they raise interest rates to try and kill it. So you can never really have the kind of rally you should have. What happens and what we want, we're going to have a lot of great months, a lot of great quarters. I want the market to go up. And just last week, the average 30-year mortgage dropped below 6% for the first time in many years. It's coming down very rapidly, and that's not with the help of the Fed. If I had the help of the Fed, it would be easier. But that jerk will be gone soon.
Additionally, central bank chiefs from around the world and top Wall Street bankers coming out in support of Fed Chair Powell. In a rare joint statement signed by the heads of the ECB, BOE, BOK, RBA, and 8 other institutions, they said, central bank independence is a cornerstone for keeping financial markets stable. Bank CEOs, including JP Morgan and BNY, echoing those comments, saying Trump's pressure on the Fed could unnerve bond markets and end up pushing rates higher. Treasury yields, let's take a look at them, how they have been impacted by this. Remember, we've been watching that. The impact of this conversation around central bank independence is key to the conversation around where yields will go. US Treasury yields, we're watching that very closely. We'll bring that up as we continue the discussion. But as you can see, this was an iconic moment between Trump and Fed Chair Powell, where there was obviously an attack, really, by the president against Mr. Powell. Now, we are counting down to the market open in India. This is how we are shaping up. We're looking at the market opening in about, just about 13 minutes to go right now. We're looking at a muted start. 755 is where Gift Nifty Futures is indicating it's going to be. That's not auguring too well because in the past couple of days, you've seen Gift Nifty indicating a much higher positive turnaround. But at this point in time, much lower, given that in the last 7 days, 6 days have been a slump. Only one day on Tuesday when the US ambassador made a comment, that's when markets were slightly better, just 0.4% up Nifty 50 was. We're watching a couple of things with Nifty 50. We're watching, obviously, the earnings. We're watching US tariffs. We're watching the rupee. The rupee, right now, it's indicating a slight strength, but the support level is between 90.25 to 90.30. Will the RBI intervene like it did on Monday? That's another question. Now, India's first main board IPO of the year drawing blockbuster demand, and this is really what's happening. The domestic interest is what's bringing the market or keeping the market where it is. Bharat Coking Coal saw bids worth about $13 billion for an offer size of just under $120 million. The subsidiary of state-run Coal India was subscribed almost 147 times, boosted by expectations of strong coking coal demand from steelmakers and its state-owned parentage. Institutional investors led the rush, bidding more than 300 times their allotted shares, underscoring a strong appetite for IPOs. Let's also just turn our attention now to Iran, because this is really what the focus is on. The situation there not only raising concerns in the energy patch, it also has India's rice farmers worried about their exports. India is Iran's largest rice supplier, accounting for nearly 70% of Iran's India exports. Indian exporters say basmati rice exports to Tehran have slowed to a near standstill as protests and economic turmoil disrupt trade. Suppliers are wary of signing new deals amid fears of non-payment, a sharply weaker Iranian currency, and fresh uncertainty after US President Trump warned that countries trading with Iran could face 25% US tariffs. Exporters say Iranian buyers are struggling to remit payments after Tehran suspended subsidized foreign exchange for food imports. Here's what Indian Rice Exporters Federation had to say about the current situation.
Iran is India's second largest buyer of basmati rice in the world, and Iran imports around $750 million worth of goods every year. That is around 850,000 metric tons. This is a very substantial quantity, and as this news has spread, there has been a panic within the entire supply chain. There has been a breakdown of communication between the Iranian importers and the exporters from India. This has resulted in huge piling of stocks at Iranian ports like Chahabar and Bandar Abbas. Even we have seen that a lot of cargoes are lying at Indian ports as well. This has led to a panic situation overall in the market, and the buying has virtually come to a halt.
So, of course, Iran is a story looming over the energy markets. US President Trump saying he will cancel all meetings or has canceled all meetings with Tehran and urged Iranians to keep protesting as, quote, help is on its way.
To all Iranian patriots, keep protesting, take over your institutions if possible, and save the name of the killers and the abusers that are abusing you. And I've canceled all meetings with the Iranian officials until the senseless killing of protesters stops. And all I say to them is help is on its way. You saw that I put tariffs on anybody doing business with Iran. Just went into effect today. And I say make Iran great again.
Earlier, he'd given them a choice. We can talk or I can intervene. And now he's saying that I'm not going to talk to you because of what's happening. That's what President Donald Trump indicating. But let's just give you a sense of how this connects to India, because that's what's important. Remember, 2,000 people killed, and not just one source confirming that. An Iranian official told Reuters that. In addition to that, another US-based human rights activist news agency said that 2,400 have been killed. 12 children as protests in 180 cities continue. Now, this is critical because when Donald Trump also announces that there will be an additional 25% tariff on those countries that trade with Iran, India has to ask itself this question: should we continue to do that? And that's a big problem when you talk about rice. We indicated that just a short while back. But also, let's just paint the picture around oil, because if you think about how much oil India imports, 89% of oil India consumes is imported. And that's why when oil prices change, they rise as they have been today, obviously down, then it impacts India big time. And that's the big question. Iran, remember, produces about 3 to 4% of total global crude oil production. But if there's any substantial change, then that still has an impact on India and its entire import bill effectively. Remember, this is also important because you have a situation where India did stop buying Iranian oil in 2019, but it has a port that it actually operates itself, and that it's managed to get a sanctions waiver from the US on for 6 months, which continues into this year. It did that in October. And this particular, Chabahar port is very important because India is bypassing Pakistan given the tensions with the nation, and it's trying to increase its outreach to Afghanistan, to Central Asia, and of course Russia. We also have this question of how much oil will actually be bought in the future from Venezuela. We've not even started talking about that, as Reliance, a biggest private player when it comes to oil, reaching out to the US officials and saying, let us buy oil from Venezuela as you plan whatever you're planning in Venezuela. And we're looking at the stocks, and that's something we're going to be talking to our guest today about. Probal Sen is the Vice President of Equity Research at ICICI Securities. And just for our viewers, Nifty oil and gas was down 2.90 in the past 1 week. BPCL was down 3.4. Indian Oil Corporation down 6%. ONGC was up. Oil India 11% up in the past month. And that's something that's perplexed a lot of people. And I want to start by asking you about that, Probal. Why is Oil India up? What is going on with the reaction in the Indian stock market when it comes to Nifty oil?
I think if you, hi, good morning. Thanks for having me here, first of all. I think if you go back to just before the previous month, if you look at the way that the stocks behaved, ONGC and Oil India had been fairly subdued for a long period of time. And the OMCs are the ones that have been doing better, primarily because GRMs have been holding up at fairly strong levels. You had all those disruptions that were coming through from Russian refining capacity. You had some disruptions in Nigeria's Dangote refinery. And that has obviously reflected in strong product spreads. And at the same time, crude prices were at fairly low levels. For a fairly long period of time, consensus was holding at $70, $75 net realizations for ONGC and Oil India. And obviously, as that kept getting downgraded, stocks were tepid. The recent rally that you're seeing is very much, I think, a relief rally in the sense that if crude prices actually go up, and they have gone up about $5 in the last 6 sessions from what I can see, obviously that will impact net realizations for the upstream companies. Every dollar increase or decrease impacts standalone EPS by upwards of around 1.3 to 1.4% for each of these names. So obviously that has had an impact in terms of how people are looking at these stocks at this point of time. And more importantly, what you mentioned earlier, the uncertainties around crude sourcing, for downstream players is probably creating a little bit of jittery nerves in terms of how those numbers would play out over the next 3 to 6 months.
Yeah, but I'm not sure about the divergence. You have Oil India up 11% and Indian oil down 6%, BPCL down, Reliance falling 8% in the last 13 days. That's Reliance. The others are per month. So I'm not understanding why there's a divergence. Could you explain that?
So Oil India is primarily an upstream player and it doesn't really have to import anything. It basically makes market prices on the oil that it sells, as long as the crude remains below $75, as per the regime that was put in place when windfall taxes were actually introduced in July of 22 in the aftermath of the Russia-Ukraine conflict. So if crude prices have risen by $5, that is an accretion of around 7 to 8% of its earnings. Or to put it very simplistically, versus when crude was at $60. Now, when it comes to IOCL and Reliance and all the other downstream players, while earnings have not really been impacted as of now, I think the fear is that if crude sourcing itself were to be restricted completely from Russia, the $2 to $3 discount that they have been making on about 20% of their portfolio, which is what they roughly source from Russia as per various reports, that 40-50 cent advantage in their GRMs is going to go away. Plus, of course, there is the looming threat if there are any sanctions specifically for Reliance with respect to its export markets in US and Europe. I have no way of verifying what sanctions would be there, but that fear is what is playing out.
Okay, so the other zeitgeist is, the perception is that these sanctions, these sanction waivers, this geopolitical uncertainty, Venezuela, Iran, Russia, all of this is resulting in a situation where there is almost this situation where there are loopholes that all these countries have managed to figure out. I've spoken to analysts and they are suggesting that, one, India is not going to stop buying from Russia. It's made itself very clear. Sure, private players might suggest or announce that they've stopped buying oil from Russia. But at the end of the day, there are loopholes that may not be their responsibility, but Russia's responsibility or somebody else's responsibility. That is what is going to keep the flow of oil towards India going despite all this uncertainty around sanctions. So can you give us a picture around that?
I think if I can just take a minute to just look at the numbers that we are discussing. At the end of the day, what has the effective control of oil or restoration of their oil production in Venezuela achieved? If you assume that because of recent US actions, the naval blockade that was put in place in December is going to be withdrawn, that immediately gets about 0.2 to 0.3 million barrels additional Venezuelan oil on the market. We recently had a report where I think Vitol and Trafigura have obtained licenses to start marketing that crude again. We hear reports they're talking to Indian and Chinese buyers to basically market this additional oil. But on the flip side, Russia, despite all that has happened over the last couple of years, is still putting about 4.3 million barrels a day of crude, if you look at the seaborne exports data. And Iran, again, is probably putting about 1.3 million barrels a day into the export markets. So when it comes to the math, if you're talking about taking all of that oil off the market, I think practically speaking, that would be very, very difficult to do. Whether India can continue to purchase Russian crude is best left, frankly, to the government official policy and what OMCs basically do. What we have in front of us is data that tells us that in January, Russian shipments have dropped a further 19% to less than 1.2 million barrels a day, or less than 1.1 million barrels a day, from levels of around 1.4 to 1.5 that I think India purchased in FY25. Whether all of that can be actually taken out and replaced with other sources, one would think it's very, very difficult. Now, what are the terms on which those crude will be allowed to come in? What are the additional tariffs or costs that Indian buyers or Russian exporters will have to bear? I think that's something we'll have to basically wait and watch. But very difficult to see that all of that crude, whatever, Iran is now a negligible number. I think we import only about 0.2 million barrels a day, I think, from that country as per data. So that is not a very, very big issue. But in terms of Russia, whether we can eliminate all of that and still manage to function, I think that's a big if. And it looks unlikely that all of that crude will go away.
Okay. Can you paint a picture for us regarding Reliance and its outlook that you have in your mind, given all of this uncertainty? Because Reliance has sought permission from the US to buy Venezuelan oil. You have at the same time Reliance effectively saying we're not going to take any Russian oil. How does it diversify? Does it still have the edge? Does it still have the advantage? Should the market still look at it positively?
So I think with Reliance, very clearly the issue is that they were actually a major purchaser of Venezuelan oil before the sanctions came into effect. And I think Reliance has always been very clear that if there are sanctions in place, if there is a compliance that needs to happen in order for us to continue exporting products into the US and Europe, since they're a global company, I think that is something that Reliance will continue to do. Obviously, can the realignment happen seamlessly, and can whatever Russian crude they have eliminated be replaced with heavy Venezuelan oil? I don't know if the volumes actually support it. But the fact is that the nature of Venezuelan oil, given the kind of heavy crude that most of their wells produce and the kind of impurities that are there, Reliance's configuration is one of the few in Asia, alongside maybe a few in China, that can actually process this crude and produce high quality products. So they are, from an operational standpoint, well equipped to purchase more Venezuelan crude. How much will be made available through US or Venezuela is something I think that we'll watch. In the meantime, frankly, the stock has obviously come off quite a bit, and prospects for Reliance are not driven not just by the OTC business or the oil to chemical, but also by the prospects of its retail, the digital services business, and so on. And those continue to be in good health and continue to grow strongly. So I would say this is a good level to get in from our perspective.
Okay, fantastic. Remember, the stock fell since it said that it won't be purchasing Russian oil. And I want to understand, frankly, geopolitically, where does Reliance and India really stand in the conversation around, energy players, big energy players that Trump is trying to woo towards investing in Venezuela? Is Reliance a priority in that conversation? Okay, can you give us a sense of this? Presuming we do see a change in Iran, what is your sense of the impact on oil prices and, in general, geopolitically, to India?
Wow, it's a little bit outside my remit, but I'll do my best to answer. See, again, coming back to the numbers, what I mentioned, that Iran's exports have languished at between 1.1 to 1.3 million barrels. The fact is, like Venezuela, Iran's oil infrastructure has also taken a big hit by virtue of the sanctions and restrictions placed on foreign companies' presence and other factors. So if Iran were to come back into the fold in terms of global energy markets without any sanctions and restrictions, there is a lot more crude oil potential that can actually come through. If you look at the kind of reserves and the kind of assets that they have, their production at peak, I think, was 4 million barrels of oil per day. And I think there's no reason why it actually can't get back to that level. Similar to Venezuela, of course, there is an issue with respect to how much time it will take and how much investment it will take. So that is something that is something we'll have to see. But I think it is one more factor in terms of adding to the overall supply surplus that is emerging, or at least was emerging before all of these geopolitical events actually played out. So I think that's something that's going to play out for Iran also, if a transition happens.
Yeah. So, one of the other questions here is that how does a country like India start preparing for the disruption in the Strait of Hormuz as a result of that potential situation in Iran getting exacerbated? And how does that pair with the idea that Reliance has to diversify away from not just Russia, but potentially, Iran now and, Venezuela and anything coming from there, even if it's tracked from some other country? So what does this do to India's oil supply, diversification-wise, and to Reliance's when it's already said it won't buy from Russia?
So if Strait of Hormuz actually gets disrupted, India would not be the only country impacted. Let's be very clear that I think about a third of all seaborne crude actually passes through that strait, if I'm not mistaken, close to 19 million barrels a day of crude. So I think every country has to actually worry about their crude supplies, not just India. Of course, India is something, given the data that you mentioned, 85% plus of our crude is actually imported. So our vulnerability to disruptions in crude supply routes and crude supply sources is obviously very, very high. So I think that, India is already or has already made some moves to ramp up its strategic petroleum reserve. I would venture that it's probably not sufficient as of now. But events like this, and if the world continues to get more fractious in terms of geopolitical events, you would obviously have to probably really, really focus on creating a strategic reserve of something that's meaningful, something like 40, 45 days of your requirements rather than probably low single digit number of days that we have as of now. I think that is something that you'll have to do. Other than that, if Strait of Hormuz gets impacted, I don't think there's anything anybody can do in the short run to sort of
I'm not
look for
sure.
another.
Yeah, I'm not sure how India will manage its Chabahar port if that happens, and that will have additional ripple effects on India. Final question for you: the EU sanctions, something that's not been somehow headlined enough, kicking in around Jan 21st. They won't accept oil from refineries that accept oil from anyone processing Russian oil, and that could include the public sector companies in India. At the same time, India is trying to make that trade deal with EU by the end of this month. So this is an important thing that India cannot, flounder with, cannot say we won't do it. So what happens now with that aspect?
So again, I don't think that there's any meaningful exports that happens from the public sector oil companies to Europe. Most of the public sector oil companies refining is actually short of what they actually even sell in the domestic market. They end up buying more from the private refineries. Frankly, we'll have to see in terms of Reliance has earlier spoken about the fact that they have clear identifiable product streams from other crude. And therefore, they are not they're going to ensure that, any products manufactured from Russian crude do not find their way into Europe. I have no idea how that happens, but that is what they have basically stated. So they will be compliant again with European sanctions and European rules with respect to products manufactured using Russian crude. But as far as public sector refineries is concerned, none of them really export anything meaningful to Europe. So I don't think that's an impact.
All right, sir. Thank you so much. Probal Sen from ICICI Securities giving us that deep perspective on everything to do with Iran, oil, and India. Now, Indian markets have joined the trading day. We look at some movers in Mumbai after a very short break. We're back in 2. Welcome back. It's been a couple of minutes. The Indian markets have come online as expected. It's been muted. Remember the uncertainty around Iran, US tariffs, and of course the earnings season. This is when things ramp up a little bit. We're watching that, whether those earnings will be closer to the double digits or the middle single digits. That's the big question. The rupee, very interestingly, on Monday, there was, according to traders, intervention from the central bank in India. At this point in time, we'll have to wait and see whether it is the central bank or something else that's impacting the rupee. The rupee rupee strengthening against the US dollar, despite the fact that the dollar has strengthened by about just a bit. Now, taking a look at some of the quick commerce-related stocks, they're opening up this after reports that India's government has ordered firms, well, not ordered, but effectively told them in private consultation meetings, including Blinkit, Zepto, and Swiggy, to stop promoting their grocery services as 10-minute deliveries. The Labour Ministry raised these safety and worker welfare concerns in a closed-door meeting, citing fears of rash driving and pressure on delivery riders. The industry, remember, is valued at $11.5 billion and has attracted heavy investor interest. Blinkit has already dropped the 10-minute label on its app. At this point in time, Blinkit's parent company, Eternal, down about 0.1%, and Swiggy down 1.41%. We're also watching what happens with Zepto, which is filed for an IPO. We'll tell you more about that later. Taking a look at insurers, ICICI Lombard and ICICI Prudential, both posting earnings. ICICI Lombard saw a 9% decline in profits year on year as higher payouts to agents and employees outweighed demand in insurance. ICICI Prudential, however, reporting a 20% surge in its third quarter profits on the back of higher investment income. The shares at this point in time, Lombard at 0.28% up, and Prudential down about 0.2%. Now, that's all the time we have today on Inside India. Keep watching CNBC because Access Middle East is up next, and there's a lot to cover.